Okay, so you've seen a lot of traders over the years. What would you say is the biggest hindrance? What torpedoes more traders than anything else?
It's really two things. So the first one is just a lot of people don't have any edge. So they don't know what they're doing. They don't have really a process, and they're just kind of batting things around and looking what other people are doing. Um, and I would say that's more prevalent in retail, just because there isn't as much training. And so, like when I was at Swift Trade, there was definitely people that were just like there, but they didn't really know why they were there, and they were just kind of batting shit around to see what happens, with no real process and no edge. And then the other thing I would say, like with good traders, who, like have potentially an edge or like know what they're doing, is over trading. So just not just the transaction cost, but also the like good traders are very tight, but very aggressive. So like in poker, that means like you don't play very many hands, but when you play hands, you raise and you go all in and push people around a lot. In trading, that means if you're good, you wait, and then like you just can't wait anymore because this opportunity is so good that you have to do it because like it's clearly like. But then the opposite of that, obviously, is some people are unable to pull the trigger. But I think in general, and that's kind of a continuum that you could argue is sort of the same thing. Is the continuum from unable to pull the trigger all the way to over trading. And so like if I wanted to cheat a little bit, I could say like being on the wrong part of that continuum is the other thing. And then probably like one more that is more if you want to succeed in the long run, which I think this is kind of the most important. So it's not important as a starting trader. As a starting trader, you want to, take the appropriate amount of trades and figure out what your edge is. But then if you want to survive, like say 15, 20, 30 years and keep on trading, I think adaptation is something that a lot of people don't have. So they get like this methodology, like I'm a really good breakout trader. Okay, but if we're in a 12 VIX regime, your breakout trading strategy is probably not going to perform. Whereas people that are more holistic and like even broader than that, like people that aren't just about technicals or just about monetary policy, I think people that are more able to adapt and say, okay, this is the regime, this is what's paying in this regime, so I'm going to trade more like this, which doesn't mean like jumping all over the place. It just means more like slowly being able to adapt. Like a really good example of that is 04, 05 is this might not be factually perfectly accurate, but my recollection of when the algos really started to have an impact was around 04, 05.
Okay.
And there was a really clear distinction between some people were like, these algos are bullshit. They're ruining the market. This isn't the same market as it used to be. That was like one way of looking at it. And then there was another group of people that were like, how can we beat these algos? This is like a whole new thing. Like, we got to figure out how to function in this weird new thing where like every time I do something unexpected happens. So kind of like that mindset of like adaptation and like going with the new reality, or saying I'm really good at this thing and I'm just going to keep pounding this thing until eventually that thing just doesn't work anymore.
Right.
But that's more of like a long-term thing. I think that's not like obviously I guess adaptation involves some time element. So
Okay.
Initially you don't have to adapt when you start, but over time, people that don't adapt just end up, you see a lot of traders do really well for 5 years or 6 years, and then the regime shifts and then
they don't adapt, and then they get stuck. You're absolutely right.
And actually, that's the hardest thing about going to a hedge fund is that the path dependence of going to a hedge fund is really strong, because if you go in and you're a really good trader when VIX is above 20, and you go into the hedge fund when VIX is at 16, and then VIX bumps along, in the 11, 14 range for a year, the people that hired you are going to go, oh, this guy doesn't seem very good. But really, it's kind of like your trading is regime sensitive, and everyone's trading is somewhat regime sensitive.
Right.
Like no one can perfectly adapt to like global financial crisis or, VIX at 10. There's just, but being able to somewhat adapt
It's important.
makes you survive way longer. Yeah.